Big money is loading up on Canadian oil and gas stocks. I'm talking billions and billions of dollars flowing from US institutions into major Canadian names. Today, I've got two Canadian stocks for you that I think are going to materially outperform in the long run. I'm basing this not only on what US institutions are buying, but also on the specific assets and qualities they're looking for and the things that make Canadian oil and gas better than anyone anywhere else. A lot of the information I'm using for this video came from Q3 filings, where we finally got a peek at what these major institutions, and I'm talking like pension funds here, what they were doing. And the reason why those kinds of investors are really important is because they have a quality, a skill that a lot of shorter term investors or traders don't. They don't think in quarters or years, they think in decades. They can really, really zoom out. And what they've seen by zooming out is that Canadian oil sands specifically are structurally underpriced, have a massive structural advantage in the long run, and we are at the bottom of a cycle right now, so these assets are incredibly cheap. Now, one of the best articles I've seen recently is this article I'm showing on the screen right now from the Calgary Herald. This was talked about by guys like Nuttall, who was talking about it on Twitter. I was mentioned by a couple other players who are really into the space, but I think if you're not a Canadian oil and gas investor, you probably didn't see it, and that is an absolute shame, because this article points out some really, really interesting key points. And one of them is that these Canadian oil sands names have outperformed comparable US peers by up to 40% in the last year and a bit since the start of 2024. Now, while you might think, oh man, they're outperforming, maybe that means they're overpriced, they're too expensive now. I think that shows that the difference between these Canadian and US stocks is not just where they're listed, it's not just their structure, it is the fact that they are completely different opportunities, and that the Canadian stocks are going to be better to hold in the long run. Now, there's a couple key things you got to think about here. We're talking a current market that is looking at some sort of massive oversupply. I mean, everyone keeps saying the price of oil has dropped significantly this year. We are within what is called the death zone for shale oil producers down in the States, where they can't afford to drill, or at least they can't afford to drill anything but the highest quality well. We are looking at even more oil glut fears as we go into the start of 26. We are looking at questions about global GDP growth. Are we actually going to run into a massive recession, or are the tariff dramas going to go away? And the fact is, all that uncertainty has led to short-term bearishness. And I think that's justified. I mean, I've said it before, I'm short-term bearish on things like oil. But what I'm not is short-term bearish on oil sands stocks, because they have some key abilities. To quote Eric here, long duration, low decline, high free cash flow. I think those are the three things that set Canadian oil sands stocks apart from basically any other competitor out there. Think about the reserve life of companies like our major Canadian oil sands producers. We are talking not years, but decades. And in a future where they're allowed to expand, where they are given some license, where they're able to invest at an optimal rate without worries about regulation, I think these guys could have more than just decades of reserve life. We could be talking beyond any of our lifetimes. And within that time, they have already made a lot of the major investments to get these things on the road. So now we're talking these companies able to sustain their dividend down to a $45 barrel, which, by the way, even the most doom and gloom bears aren't seeing anything less than a $40 barrel over the next couple of months. So that means these guys are basically immune to the short-term supply glut fear. And they are incredibly high free cash flow assets, which means that at times like this, these companies are buying back shares, which means that as an investor, you are literally not only making a great amount of money off your dividend, which you can reinvest, and it's something that I personally do, but you're also getting a shareholder return in a buyback, which is then either reducing your cost basis or boosting your overall ownership, depending on how you look at it. Either way, awesome for you. Now, I'm not the only one who sees this massive opportunity. There's a lot of investors out there that are moving in this way. We've seen it start to gain a little bit of traction. You know, you see in the major podcasts on BNN, you're seeing these stories start to pick up. But I think one of the things that we almost forget about is that Canada is structurally better than our peers at this. Yeah, there are lots of major companies out there. We're talking the super majors. Of course, they have decades of reserve life, but not at this price. They have huge, massive infrastructure advantages, scale advantages, but not at this price. And institutions are picking these shares over those. And I personally think there is probably a really good reason for that. And I think a lot of that has to do with time frame. If you're trying to invest for the next 6 months and you're going to pick up, we're going to talk about CNQ later. If you're picking up shares of CNQ, I really do think that's a mistake. Listen, it's not my portfolio. It's your choice to make. But I think if you're trying to buy things on a short-term basis, you're going to miss out, because I think the story, of course, comes over a decade. We're talking the whole of a commodity cycle. And I think you're going to have to wait until things are looking awesome before you start thinking about selling. One of my favorite things to do is buy against a cycle. It's one of the major reasons why I've started talking about the interest and importance of Canadian oil and gas over the last year, why I've been pushing it as such an interesting opportunity in the Canadian markets. Because let's be honest, how many other people are telling that story right now? And somebody that also really loves looking at commodities, buying against the cycle, is famous investor Rick Rule. And he has been talking about oil more and more and more over the last weeks, months even. And I think as we see names like that start to get the story out, we see more stories like this where major US institutions are buying big stakes. We see stories like, you know, there were even Canadian stories talking about the institutional ownership of US firms increasing. You're going to see more and more investors take it seriously, and they're going to look at the opportunity, and that's going to majorly improve the chances of a serious bull cycle in the stock. And while maybe the price of oil still has a couple of years to go before we see some real long-term structurally higher pricing, and honestly, with one major geopolitical shift, that could be tomorrow. But if we're thinking in a normal world where nothing changes, right? We have a low entry to 26 and then a slow climb. Stocks are going to move way faster than the commodities do. And the oil stocks that are going to have the best long-term performance are going to be the ones that fill those institutional investors' needs best. We're talking low decline, long reserve life, free cash flowing, high quality assets. And if you think about who has them, these two names, I think, are the best in Canada. We're going to start with a name that I've talked about a lot on the channel recently. And a big part of that is not only because they have sort of turned around their business, focused on their upstream production at a time when that was not necessarily a popular move, but that investors that have been following the story really love. We got Cenovus. Now, if you don't know, of course, Cenovus has their major buyout of MEG Energy, now backed by Strathcona. And to quote again, Eric Nuttall, which is one of the most respected voices in Canadian oil sands, they are going to have the best quality assets on their books. And I think that puts them at a structural advantage. If you talk about a couple key metrics on the company, you're looking right now at a market cap of $41 billion, well within the investable range for major institutions. And institutions have been buying up the firm. One of the most famous institutions that made a big increase in their investment is the Canadian Pension Plan. Again, we're talking people who think in decades, not in years, because they see, okay, these guys have this long-term potential. Now, year to date, these guys are up just under 8, I almost said 8, under 9% this year, which is not fantastic. If you're looking, their sort of earnings have been pretty good. We're looking for obviously more outperformance once the whole MEG Energy deal is signed. We're looking at significant synergies with that. We're basically looking at the question of how painful is the short term, because in the long run, they will be a major winner. We're also looking at a potential for them to be massively paying down debts that they've done, sort of taken on as part of this deal, and continuing to optimize the business, which could result in hundreds of millions of dollars in synergies and hundreds of millions of dollars in free cash flow on top of what they're already generating, which is a lot. So Cenovus, story here. They were hated. Now they're pretty loved. The price is maybe a little bit less attractive than it was a couple of months ago, but they do have some of the highest quality assets. They're growing. And while they might not be the biggest player, I think maybe that slightly smaller scale might give you some better entry points over the next year. You're looking at maybe some shorter term downside as an opportunity to buy. That's personally how I look at the stock. I'm not necessarily rushing out to buy shares at any price, but I do think if you're going to hold this for 10 years, you're going to be really happy you did. The next name on the list is my biggest holding in Canadian oil and gas. It's a stock I talk about a lot, and it's got so many key reasons. Canadian Natural Resources. First and foremost, we're talking a $93 billion market cap. So that is literally more than double Cenovus. And they have gone on an absolute mission to buy out other oil sands assets. 2024, they were just gobbling up assets. And they bought out assets from sort of international, might not be the right word, but foreign companies that were not necessarily as in love with the oil sands. We're talking they were buying out guys like Shell, right? And they were consolidating this massive base. And they do a couple things well. First and foremost, these guys are ruthlessly inexpensive operators. They are going to get the prices down no matter what. Love them and hate them for that, but they are going to get the price down, which means that in a short-term bear market, right, where you're looking at short-term lower oil prices, these are going to be one of the best operators out there. They also have a huge scale that they've used to their advantage. We are talking so many lucrative long-term deals that they have signed, either shipping stuff down to the US Gulf Coast, shipping stuff down to the Canadian West Coast, right? Like, it doesn't matter where you are operating, these guys are going to take advantage. They're also perfectly positioned to supply all the new data centers that people are looking to build, both here in Canada and in the United States, with natural gas to power them. They're in a perfect position to take advantage of any, again, this might be a pipe dream, but any new egress from the Canadian oil patch. So we're talking new pipelines, new efficiency, whatever it might be. If you're looking at somebody who can take advantage, who could offer to sort of supply or fill 1 million barrels a day, CNQ is going to be at the table every single time. And get this, their stock has been dead money for a year. And I know because I've been buying it for a year. I have had an opportunity to buy the shares between $40 and $45. And this is the TSX listing, just for my American friends. I've had the opportunity to buy between $40 and $45 for just about the entire year. We've been a little bit below it back in April. We're a little bit above it in June there. And you know, we peak up and peak down. But I've had this awesome opportunity to buy. And I am buying shares consistently at these prices because I think you could see prices as high as $60 a share within maybe a year. Right? It depends, obviously, but these guys are going to be very much exposed to the sentiment in the Canadian oil sands. They're going to be very much exposed to any sort of major political changes or egress changes in the terms of pipelines or whatever that might look like. They're very much exposed to movement upward in the price of oil, and they are so respected in the space. Institutional money has absolutely been flowing here because, again, $93 billion puts them in a league of their own here in Canada. These guys might not be an ExxonMobil, right? We're not talking the biggest, but that's $100 billion. That is a big company. And when you're at that scale, at that size, it's a lot easier for these institutions to justify, oh, well, let's just pick up another couple percentage. That and the fact that their scale and size has allowed them to be so efficient, to generate so much free cash flow. They have a million opportunities to profit over the next little while. We could look at them doing anything from buying back huge shares, from buying out new assets somewhere in the Canadian market, right? We're either they're going into heavy oil, buying out more oil sands from smaller players, right? It doesn't really matter. They have so many opportunities to win and so few to lose that it's almost a no-brainer to own. And while it might not be the cheapest out there, it's definitely cheaper than some have gotten over the year, right? We've seen some companies that are up significant amounts over the same period of time, despite the fact that they have almost no structural advantage over CNQ. And that scale is almost always the way I'm going to play when I'm looking at a market that has a major change coming, but I'm worried about protecting downside. On top of that, they're paying me out a pretty solid dividend, and I could comfortably be holding this, again, like I said, decades, not years. So these are the two shares the two stocks that I think are going to probably outperform over the long run. I see that because of quality of assets. I see that because of the way that they've perfectly positioned themselves in what institutional investors want, and that I think they are going to take advantage of the real opportunity here in the Canadian oil sands in the long run. I would love to hear from you though. Which companies are you buying? Right? There's a lot of awesome natural gas names we've covered. There's lots of smaller cap names we've covered. What are you buying? What's in your portfolio right now and why? Right? If it's one of these two names, awesome. If it's not, what are you looking at? What's your time frame? Like how does your strategy differ? Because always super interested to hear about that kind of stuff. And as always, if you like the kind of content here, you like what we do on the channel, please do like it. If you like covering these Canadian topics and talking about these things that very few people are talking about, please do subscribe. And I hope I see you in the next one.